Hi, this is Alessio. Hope you're well. With a quick update for you on the financial markets and also a quick update on what's happening here on the chart of Bitcoin as well. Now, also in this video, I'm going to explain to you what this potentially could mean as well, this data that I'm going to show you here in a few moments. So guys, first of all, as you've seen so far over the last few days, our prediction and forecast on the markets has been correct. You may remember in my video on Sunday, I said, look, after this extreme major market drop we've seen in the, again, on the financial markets, this extreme 4 standard deviation drop on the stock markets, we said, look, on the balance of probabilities, given the fact we had an acceleration extreme signal, I said in my previous video, we had an acceleration extreme on the 4-hour time frame. We also had a McClellan extreme as well, McClellan oscillator extreme that I mentioned in the previous video. And I said that on the balance of probabilities, the most likely outcome would be a bounce in the stock markets. And by the way, guys, so far, that forecast, that prediction turned out to be correct. So we've had a nice bounce, and I think we could see a bit further upside here in the markets in the next few days and weeks as well. As far as Bitcoin is concerned as well, just to quickly mention Bitcoin, we've seen Bitcoin holding that supporting trend line that I mentioned in my previous video. If you recall, in my previous video on Bitcoin, I said that Bitcoin has to hold that trend line. It's a very important trend line support. As you can see, guys, it's held it beautifully so far, and it's managed to bounce off that trend line as well. By the way, it's bouncing off that trend line within the time window that I mentioned, within that green time window that I mentioned to you between the 2nd and the 6th of March. So far, that bounce on Bitcoin looking good, but it's not in the clear yet. It has to break through resistance. It hasn't broken through resistance just yet. Now, going back to the chart of the stock market, I'll come back to Bitcoin in a few minutes. Now, guys, let me ask you this question. When the markets were tanking and dropping heavily last week, what was the reason the mainstream media gave you as the cause of that drop? You know as well as I do that the reason the mainstream media gave you was the virus story. So they were saying, oh, the markets are panicking because of the increase in the virus. Okay, so let me ask you this question. Have the numbers of cases of the virus, have they increased or decreased during this period when the market bounced? Guys, I'm sure you know, the number of virus cases have actually increased over the last few days. Not decreased, but increased around the world. So let me ask you this question then. Why, therefore, has the market not gone down further? All right, because if the markets really were going down because of an increased number of virus cases, people panicking, then you'd expect the market to drop even further, right? Well, guess what? Apparently, the markets now like the virus, right? The markets must really love that whole virus story, right? No, guys, you know as well as I do that the real explanation for why the markets dropped had nothing or very little to do with the virus. So I don't want to go through it all over again. I've already explained in my previous video. Go ahead and watch that video for the actual true reason why the markets dropped. Now, I know what some of you are probably thinking. By the way, guys, let me just tell you, I've had people over the last few days say to me, oh yeah, well, the markets are going up because Joe Biden won the Super Tuesday primaries. The only answer I can give to that is this by Mr. Faulty.
More rubbish there. What? More of that bloody rubbish.
Exactly. I could not agree more. Absolute nonsense. And yeah, I know some people are going to say, well, it's the Fed rate cut and all that kind of stuff, guys. It doesn't matter. I would highly recommend, guys, if you haven't done this already, do this. Write on a piece of paper these words. Show me the charts and I will tell you the news. Let me also show you this. These are some of the comments I received last week, especially on Sunday. Guys, I can tell you the amount of absolute panic and anger that I got in the comments section on my video on Sunday is absolutely unbelievable. Here are some of the comments. Let me read them to you. Again, I blacked them out. I blacked the names out, obviously, because I don't want to embarrass people here. But here's one comment from one person. Global markets will close bleeding again. Here's another one for you. This person is absolutely scared. You live in the clouds if you expect a bounce from this. It's everything to do with the virus. Forget your technicals and follow the spread of the virus. Oh my God. Guys, by the way, whoever wrote this comment, thank you very much indeed. You made my day. I really laughed really hard at that one. Oh, and here's another comment for you here. They can't print away the virus. No bounce back for now. Guys, when you read comments like this, something should immediately pop into your head. That the majority opinion, in other words, the herd, everybody out there, has become extremely scared and they're all thinking the exact same thing. As I'm sure you already know from your own experience of market sentiment, when everyone's thinking the same thing, somebody is not thinking. And by the way, this brings me to another important point. One of my favorite philosophers of all time, his name is Friedrich Nietzsche, who lived over 100 years ago in the 19th century. And one of the reasons why I absolutely like Friedrich Nietzsche as a philosopher, now listen, I don't agree with everything Nietzsche says, but I do agree with him on this point in this book here, one of his best books ever written, which is Beyond Good and Evil. I want to read you this passage here. By the way, I first read this book when I was 19 years old at university. And when I first read this, it didn't make a lot of sense to me what Nietzsche was saying here. But guys, sometimes reading Nietzsche is like a bottle of wine. Wine has to mature over a period of years to get better. Same thing with Nietzsche. His books actually make a lot more sense after a period of years when you start thinking about what he's really saying. I read this book when I was 19 years old, and it didn't make a lot of sense to me, and I didn't really understand it that well. But I want to read this to you because it's really profound and very powerful what he's saying here, especially this section over here. So let me go ahead and read this to you. He says, one has to get rid of the bad taste of wanting to be in agreement with many. Good is no longer good when your neighbor takes it into his mouth. And how could there exist a common good? The expression is a self-contradiction. What can be common has ever but little value. So what is Nietzsche saying here? Nietzsche is saying we human beings have a herd instinct. In other words, we have an instinct naturally to be part of the herd. We want to be in agreement with the many. We want everyone to be in agreement with us, and we want to be in agreement with the many. All right, guys? This is what's called herd mentality. And it's one of the most dangerous instincts that we have as human beings. It may be helpful in some ways, but also is quite dangerous because it leads us in the wrong direction. So what Nietzsche is saying here, guys, if you want to be a great individual, you got to think for yourself. You got to think outside the box. Just because everyone is thinking the same thing does not mean they're right. To be a great individual, we must resist the urge to be in agreement with the many and for everyone to agree with us, which is what Nietzsche is saying to us here. We should be careful about this herd mentality instinct. And guys, what Nietzsche is telling us can also be applied to when we examine the markets and we examine the charts. As good chartists and as good analysts or traders, we have to resist the temptation to be in agreement with the many, with the herd. So guys, we were right to disagree with the herd at this point when the markets dropped, because everyone is expecting a further drop, and we said no, because there's a high probability at this point of a bounce in the stock market, and we were right so far about that. All right, so far so good. But here's the thing, guys. I want to show you this. This is actually a very important piece of data. And in this particular table, this is what usually happens when the Federal Reserve does an emergency rate cut. You probably heard the news recently that the Federal Reserve cut rates as an emergency measure. Well, here's the history of what usually happens to the stock market after an emergency rate cut. You will see that in the majority, first of all, as you can see, there's the dates on the left-hand side. So that these are the actual dates in history. And next month, so within the next 30 days, there's a positive bias, or shall we say result, in the stock market. On average, the market seems to rise over the next 30 days, over the next month. So the average is about 2.85%, sometimes higher, sometimes lower. Over the next 6 months, that's actually very interesting. Over the next 6 months, it gets worse. So notice what happens. After an emergency rate cut, in the past, we've seen, actually in the majority, market seems to drop over the next 6 months. And in the next year, it's even worse, guys. Take a look at this. The percentage drops in the stock market begins to get really bad. As you can see here, 14%, 11%, 15%, negative, by the way, these are all negative measures, minus 11%, minus 35% in 2008. Now, there are exceptions to the rule, like the late 1990s. The late 1990s were the exception to the rule. So obviously, these are based on probabilities. But again, in the majority, guys, we've seen that over the next year, there is about an 8% drop on average in the stock market. In other words, another 8% in the markets. So as you can see here, some of the drops here have been very bad, some of them over the 15% level there. So what this seems to tell us, guys, that while in the short term, we would expect a bounce, and we have seen indeed a bounce so far, as you can see here, on average, there seems to be a good result after an extreme drop and after an emergency rate cut. The majority of results seem to be positive. But over the long term, over the next 6 months and over the next year, the average results are terrible for the stock market, which means what? We should not get into the herd mentality of getting excited about this bounce, because yes, this bounce potentially may go a bit higher. We might even go and maybe fill this gap here. There is this gap that's on the stock market right here. You probably noticed it right about here, a gap on the S&P and on most stock markets here that has not been filled. Now, I am doubtful that this gap is going to get filled anytime soon. I would be surprised if this gap got filled in the next few weeks. But look, it would be lovely. It would be wonderful if this gap here on the markets got filled, because I'd be looking to get aggressively short once we fill this gap. Of course, I'd be looking for a reversal signal first. But again, guys, I personally doubt we're going to come all the way and fill this gap anytime soon. I think this bounce may go slightly further higher, but I really doubt we're going to fill this gap. But again, if it did fill this gap, wonderful. because I'll be looking for a potential sell short signal. Once a signal occurs to get short in the market, I'll be looking to get heavily, again, betting against the market at that point. So guys, what this data is telling us is that we should not become complacent, because once this bounce potentially completes, the mainstream media is going to tell us that this is a bull market continuation. In fact, it is not, because once this bounce completes, we could see another rollover and another drop in the stock market soon. And by the way, one more thing, guys. I think if the market does make another drop, then it could drag Bitcoin down with it, because we've seen a high correlation between the stock market and Bitcoin so far. There seems to be a strong correlation so far in the last month or so. So I think if this data is correct and the markets do make another drop in the next few weeks and months, that could drag Bitcoin down with it. Now, it's an if. We'll have to wait and see for that confirmation. By the way, guys, before I finish the video, you might have heard of the famous psychologist called Jordan Peterson. Here's what Jordan Peterson says about Nietzsche in this very short video clip. Listen to what he says. It's quite interesting. Thanks very much indeed, guys. If this video has helped, give it a like, and I'll see you in the next video.
Nietzsche, I mean, it's difficult to estimate how intelligent Nietzsche was, but I suspect he was perhaps 1 in a billion. You know, because this is what a book is when people think about a book. You know, it's like a material entity. It's 8 inches high and 6 inches wide and 2 inches thick and weighs a pound, and it's made out of paper, and it's between two covers. But Nietzsche's Beyond Good and Evil isn't a book at all. It's a series of bombs, and each sentence is a bomb, and each sentence blows things up that people don't even know exist.